Scott Bessent is now in the spotlight as a potential next chair of the Federal Reserve. The crucial question remains, will Main Street finally have a voice? Or will Wall Street and global elites continue to dominate the conversation?
Hello, and welcome to That News Show, where we discuss the latest facts, fakes, and hypocrisy as reported by the legacy media. Let's roll the tape.
Bessent suggests that the new Fed chair could prioritize the needs of the public over those of the elite at gatherings like Davos. Fox News reports that Scott Bessent is discussing potential candidates for the next Federal Reserve chair. This appointment is crucial because the chair of the Federal Reserve significantly influences our economy, affecting everything from the value of our paychecks to the price of groceries. Prepare yourselves.
For the working class, so that begs the question then, if that's the case, if there are higher wages, businesses are going to have to pass that on somewhere else. Does that end up then with the American consumer?
Well, I don't think it has to. And look, what we saw was this mass unfettered immigration across the border, whether it's 12 or 22 million people who came in, suppressed working people's wages. And for 20 years, the big lie was that this kind of immigration didn't hurt working people. Now, economists have come out and said, oh, what a surprise. Even the laws of supply and demand work in the low-end labor market. So I talk about in that editorial what I call parallel prosperity, that for years Wall Street has done well. Now it's time for Main Street to do well, and they can both do well. And that's the one big beautiful bill. That's the beauty.
In contrast, the current administration's commitment to enforcing immigration laws and prioritizing American workers is beginning to show positive results. With robust border enforcement, intelligent tariffs, and a Federal Reserve that prioritizes the people over global financial interests, we can foster an economy where businesses and workers both prosper. Their failure to secure the border and their focus on globalist trade deals have left ordinary Americans bearing the costs. Previously dismissed by experts and global elites, even mainstream economists now acknowledge that the laws of supply and demand extend to the labor market. Real annual earnings for the middle class have declined nearly 6% over the past 50 years, highlighting the true cost of prioritizing cheap labor and open borders over the well-being of American families. For decades, working-class Americans have seen their wages stagnate or decline in real terms, despite assurances from politicians and big business that mass immigration does not negatively affect their livelihoods. The argument that raising wages for the working class will inevitably lead to higher consumer prices is a myth propagated by those who profit from the status quo. Achieving parallel prosperity is possible by rejecting past failures and centering economic policy on our citizens. Introducing 12 to 22 million people predominantly into low-skilled labor markets has resulted in suppressed wages and reduced bargaining power for American workers. Setting jobs and wages from illegal to legal residents is not only logical but also a moral imperative. Current data shows that median weekly earnings for full-time workers are barely keeping pace with inflation, which continues to erode purchasing power. Prosperity should not be exclusive to Wall Street while Main Street suffers.
Of this, it helps Wall Street and Main Street.
So let's talk about those jobs, because there are skeptics who say, the American workers and those who say who are sort of their wages depressed, that they're not going to step up and take some of these jobs. Here's a bit of analysis from libertarian leading Cato Institute. They say the U.S. labor market remains tight, and there are simply not millions and millions of idle American workers sitting on the sidelines just itching to take these newly opened jobs. To the extent Trump's broad deportation promises come to fruition, we can expect many immigrant-dependent industries to suffer and few American workers to gain. So is it overly optimistic to think there are Americans who will flood to these jobs?
I don't think that it's overly optimistic to believe that at a price, Americans will do these jobs. But, again, with these depressed...
The previous Democratic administration's policies of open borders and globalist trade agreements did nothing to correct these market distortions. Urges against this approach are primarily scare tactics by those who have thrived under decades of elite-driven policies. We stand at a crossroads. We can either continue down a path of globalist appeasement with stagnant wages, or we can restore the American promise by prioritizing our citizens. In truth, Americans are ready to step up and fill these roles when offered a fair wage. The choice is clear for anyone who values the prosperity and independence of Main Street over the unchecked greed of Wall Street and the flawed policies of past administrations. The notion that Americans are unwilling to take on certain jobs is an outdated argument perpetuated by those who benefit from maintaining the status quo, specifically global interest on Wall Street and their allies in Washington. It's a narrative engineered by those who profit from inexpensive labor without regard for the well-being of Main Street families. While organizations like the Cato Institute argue that there aren't millions of idle American workers ready to take these jobs, they overlook how the labor market has been skewed by decades of unchecked low-wage labor inflows, which have suppressed wages and deteriorated working conditions. Prioritizing American workers and enforcing immigration laws is not just logical, it's essential for a robust, self-enough economy. When wages reflect the true value of work, Americans have consistently responded positively. This issue extends beyond economics. It touches on national dignity and sovereignty. Instead, they gave more power to multinational corporations and financial elites, leaving working-class Americans to deal with the aftermath.
Wages, we've seen a lot of people drop out of the workforce, especially men aged 16 to 35 are in an era of despondency, and they have dropped out of the workforce. They are having health issues, they're having mental health issues, and I think that they will come back in. And look, this is part of President Trump's agenda. You know, we're doing peace deals, trade deals, and tax deals, and the trade deals and the tax deals are going to bring back working class jobs with good wages.
Fox News also excels in critically examining the Federal Reserve's policies and questioning the wisdom of favoring Wall Street over Main Street. Fox News has been critical in consistently bringing these issues to light with clarity and urgency. This skepticism is crucial for questioning the Fed's extensive influence and its focus on global financial interests over the average American. The current administration's focus on fair trade deals, targeted tariffs, and policies that support American workers is beginning to restore hope. The previous Democratic administration's emphasis on globalist trade policies and open borders left working-class Americans behind, compromising job security and eroding community foundations. As the administration advances peace deals, trade agreements, and tax reforms that benefit Main Street, we hope more young men will re-enter the workforce, rediscover their purpose, and contribute to a stronger, healthier nation. The focus on improving wages, expanding healthcare options, and moving away from globalist policies is crucial for addressing the economic and mental health crises affecting our young men. Their coverage, which includes a broad spectrum of expert opinions and solid data, challenges the narratives of legacy media that often overlook the struggles of working Americans. The statistics paint a stark picture. A significant number of young men aged 16 to 35 have left the workforce, impacting more than just the job market. Nearly 40% of young people now prioritize mental health at work more than before the pandemic, underscoring a shift in priorities and the magnitude of the issue. Effective care remains inaccessible for more than a third of employees due to high costs and complex systems. Looking ahead, by abandoning past failures and concentrating on the well-being of American workers, both economically and mentally, we can rebuild a foundation of prosperity and dignity for future generations. For too long, both political parties have overlooked the underlying causes of this crisis. Advocating for transparency, accountability, and sensible economic priorities is beneficial for the public and holds policymakers accountable. This has particularly affected young men, diminishing their prospects and sense of community.
Well, Shannon, I don't think it's a bit of a pause, because I think what's happened is there's a lot of congestion going into the home stretch. And as part of the trade team, what's great about having President Trump on side is he's created maximum leverage. So by telling our trading partners that they could boomerang back to the April 2nd date, I think it's really going to move things along the next couple of days and weeks.
Okay, so let's talk about some analyses on these tariffs. From the AP, they see this. A J.P. Morgan Chase Institute analysis finds a critical group of U.S. employers would face a direct cost of $82.3 billion from President Donald Trump's current tariff plans. They go on to say the investment bank Goldman Sachs said in a report expects companies to pass 60% of their tariff costs onto consumers. Our most recent poll shows that 57% of Americans do think the tariffs are going to hurt the U.S. economy. So some of the experts, everyday Americans, they have real concerns about how this is going to cost.
Tariffs are not merely a political bargaining chip. They are a vital tool to restore fairness in American commerce and protect our economy's backbone, the working and middle class. When institutions like Goldman Sachs warn that tariffs could cost American employers over $80 billion, their primary concern is their profit margins, not the welfare of the average American family. Past policies of bank bailouts, unchecked money printing, and regulatory capture have only widened the gap between Main Street and the financial sector. For households observing these developments, it's clear that a robust trade policy aims to bring jobs back to the U.S., increase wages, and rejuvenate our manufacturing industry. The predicted inflation spikes have not occurred. Prices for groceries, gas, and everyday goods have remained stable, countering the dire forecasts from Wall Street and their media allies. Meanwhile, the Federal Reserve should prioritize monetary stability and protecting the dollar, rather than pursuing progressive social agendas or accommodating Wall Street's demands. When investment banks suggest that companies will pass tariff costs on to consumers, remember that these firms benefit from maintaining the status quo, thriving on cheap imports and open borders. These financial elites have long profited from offshoring jobs and suppressing wages, while Main Street has struggled with rising costs and stagnant paychecks. As these negotiations progress, we must decide whether to continue down the path of globalist appeasement or seize this opportunity to restore American strength and independence. As we near the conclusion of these trade negotiations, the congestion signals that America is finally standing firm. This leads to more stable employment, stronger communities, and a future where prosperity is accessible to all, not just the financial elite. True reform puts the interests of ordinary Americans first, ensuring economic policy is accountable, transparent, and free from the influence of globalist institutions. Previous administrations, particularly the last Democratic one, often favored appeasement and global integration at the expense of American sovereignty and prosperity, leading to job losses, factory closures, and a weakened manufacturing sector. For consumers, this means better job security and opportunities for upward mobility, rather than constant anxiety over layoffs and wage stagnation. When American workers compete on a level playing field without being undercut by unfair foreign competition or illegal labor, they thrive. And there you have it. During the previous administration, the Fed aligned closely with Wall Street, prioritizing climate quotas and diversity initiatives while allowing inflation to spiral out of control. The Federal Reserve was never intended to act as a shadow government, yet it seems we've reached that point, with ordinary Americans bearing the brunt as unelected bankers gamble with our currency. If we aspire to a future where working families take precedence over hedge funds, we must demand transparency and reform, and cease allowing the same insiders to dictate our course. The question remains, why trust the same individuals who have previously let us down to rectify their own mistakes? Be sure to leave your comments below, and don't forget to like and subscribe. Thanks for watching.